So Luna, the token of Terra, has lost more than 95% in the last 24 hours. It's been a very bad day for token holders. It's actually been a very bad week, but the last 24 hours have been the worst. $1.64 at the time of recording this video. At the all-time high, this token used to be $118. So it is really bad for Terra Luna. It is also really bad for UST, the stablecoin of Terra. This is what we're going to discuss in this video. Let's get started. Alright, so Terra USD, otherwise known as UST, sank below 40 cents for the first time today as holders continued to exit in panic. The token at one point fell as low as 31 cents according to CoinGecko data. Is this the end of UST and even the Terra project overall? What happens next will decide this, but in the meantime, let me give you some context. UST or Terra USD is created by the Singapore-based Terraform Labs. It is an algorithmic stablecoin. It's meant to track the value of the dollar like fellow stablecoins Tether and USDC. But unlike those stablecoins, Terra doesn't have a dollar stash held in a reserve to back its token. Instead, it uses a complex mix of code alongside a sister token called Luna to stabilize prices. UST is important for Bitcoin investors as Luna Foundation Guard, an organization supporting the Terra project, is sitting on billions of dollars in Bitcoin that could potentially be dumped onto the market at any point. And some of them already did. Twice this week the price of UST fell below $1, which was not supposed to happen. Today is the third time the token decoupled from the dollar, and it is now below 50 cents again. But how is this stablecoin pegged to the dollar without a dollar reserve, you might ask? So did I. And in simple terms, Terra protocol destroys and creates new units of UST and Luna to adjust supply. When the price of UST falls below the dollar, tokens can be taken out of circulation and exchanged for Luna, making UST's supply more scarce and boosting its price. At least that's how it should work in theory. To make things even more complicated, Terra's creator, Duke Won, bought $3.5 billion worth of Bitcoin to provide a backstop for UST in times of crisis. The theory was that the UST could eventually be redeemed for Bitcoin instead of Luna, but this was untested and only worked in theory. There's also Anchor, a lending protocol that became very popular with DeFi investors as it offered around 20% annual interest for UST stakers, a rate many analysts believe was unsustainable. Now, deposits into Anchor have declined from 10.3 billion tokens on May the 6th to just 6.4 billion on Tuesday, according to data from blockchain analytics platform Nansen. On Monday, Quant's Luna Foundation Guard said it would lend $750 million worth of Bitcoin to trading firms to help protect the UST peg, while a further $750 million UST will be lent out to buy more Bitcoin as market conditions normalize. In a follow-up tweet, the organization said that it had withdrawn 37,000 Bitcoin, worth more than $1 billion at current prices, to lend out. In fact, very little of the Bitcoin has been spent, and currently it's being used to buy UST. Several crypto investors are worried that Luna Foundation Guard might have sold or will sell a large portion of its Bitcoin to prop up UST. This is the group's Bitcoin wallet. As you can see right now, it is empty. They had 70,736 Bitcoin incoming, and they had 70,736 Bitcoin outgoing. Their final balance is at 0 Bitcoin. Have they sold this, or are they preparing to sell? I mean, some of this has already been lent out, as they say, but it is still unclear where the rest is gone. And amidst all this uncertainty, UST's decline has sent shockwaves throughout the crypto market. Bitcoin briefly fell below 30,000 on Monday, hitting its lowest price since July last year. Luna, the UST's counterpart, has lost more than 3/4 of its value in the past 24 hours, in fact more than 95%. It's currently, as I said, below $2, 1.56 as we speak, 95.30% loss in the last 24 hours, a far cry from $118, which is what it used to be at its all-time high. And unfortunately, I found some Luna in one of my wallets. I did not sell it, and I tried to exit all of the tokens, all of my altcoins as we started this bear market. But here and there, I keep finding coins that I had forgotten, which is not great. I probably put around $2,000 in Luna. It is currently around $85. So you can imagine how painful this is for people who actually have more money put into Terra Luna or money put into Terra UST. On top of that, as I reported yesterday, Binance even froze withdrawals for UST and Luna tokens in the middle of the price drop, but that was just temporary and it is now reversed. So why is the token still plummeting? At this point, it is the ripple effect of panic selling. People have lost trust in the project and they are exiting in a hurry, thus driving the price lower and lower. There are some speculators that are buying these dips though. Even some of my friends are accumulating during this crash in the hope that once things recover, they will be making huge profits. And this could be true. However, a recovery lies in the hands of the founder, Do Kwon, who is being quite active on Twitter these last few days, trying to bring some confidence back to his community. Now, I'm not going to read the whole thread, but in this tweet thread, he acknowledged that the last 72 hours have been extremely tough for the Terra community and that he hopes that he can help it to survive. He recognized that the amount of capital trying to exit UST has resulted in a lot of selling of Luna due to how the stablecoin mechanics work, and this has resulted in this large price drop for Luna. And this is in addition to all the panic selling that occurred in the past couple of days as well. And before anything else, he says, the only path forward will be to absorb the stablecoin supply that wants to exit before UST can start to repeg. There is no way around it, he says in this thread here. This is his plan for recovery. To begin with, he is endorsing a community proposal that will increase the amount of Luna being minted per day by 4 times. This would enable more UST holders to cash out. Naturally, this is at high cost to UST and Luna holders, but we will continue to explore various options to bring in more exogenous capital to the ecosystem and reduce supply overhang on UST, he said. Going forward, he said the stablecoin will be redesigned to be collateralized, looking at the proposal to increase minting of Luna. So far, 80 million Luna has voted in favor of it and not a single one has been used to vote against. The vote will pass if it meets 40% of staked Luna, or roughly 114 million tokens. If adopted, this will allow traders to sell UST for Luna at a faster rate. Currently, only so much UST can be sold per day, and the proposal states that this is causing Luna to be minted at a worse price, resulting in excess minting of UST. By increasing the amount of UST that can be swapped for Luna, it will increase the rate that investors can exit their UST positions through Luna. The theory is that while this might increase the amount of Luna minted in the short term, it might decrease it over a longer period of time and help to restore the peg to the dollar. He also suggested to allow more efficient UST burning and Luna minting that will in short term put pressure to Luna price, but will be an effective way to bring UST back to the peg, which will eventually stabilize Luna's price as well. The proposal, however, acknowledged that this could have a negative impact on the price of Luna, which is already down 95% today. Luna and UST are actually the worst performers of the day. In fact, Luna has dropped even more now. It's below $1, as you see. It's currently 91 cents, 97.22% lost in the last 24 hours. UST is now 34 cents, and it's sitting at 62.48% loss in the last 24 hours. So while the whole market is taking a beating, the case of UST and Luna tokens just proved all of us who didn't believe that a stablecoin can be successful without being backed by another stable asset. So, should you be buying Luna or UST right now at this drop? I would wait. I can't really tell you what you should be doing, but I'm not rushing in. Yes, it is true that you can make huge profit if the coin recovers and if you bought it below $1. but the recovery could be long and slow, and a big chunk of the community has already been lost in this crisis. So I don't expect to see Luna reaching its recent high prices anytime soon. Now, is it going to go back to at least $4 or $5? Well, most likely yes, but this will also depend on how quick they can act and also what the rest of the market does. A drop to the lower support region for Bitcoin will send the whole crypto market on a downslide once again. So buying right now could be a bit rushed, and it is a gamble. I'm not rushing into this yet. I'm still bearish, and I will not be buying until I see the signs of a trend reversal. Tomorrow, I will do some technical analysis again, Bitcoin, Ethereum, maybe I will look at Luna and some other alts, so make sure that you catch this one. One of our sponsors is Tokenmetrics, the website that I use in my market analysis and research. They provide in-depth data and stats on all cryptocurrencies that I need to track and the majority of upcoming projects, launches and token sales. This is where I find unknown gems before they hit the mainstream. I particularly like their AI-powered analysis and market predictions, plus their detailed breakdown on technicals and fundamentals on the projects that they research, and their expertise in this field is second to none. You can track various analytics and you have the ability to navigate through categories of cryptocurrencies. For instance, metaverse tokens, if you want to only focus on these, or Solana-based tokens, or maybe you want to see which are the hottest play-to-earn projects right now, or NFTs, and so on. They have all these categories sorted for you, so you can really advance your analysis of the markets and improve your investment strategies. You can also get suggested coins to trade for the day or on weekly and monthly basis, or create your own indices and keep track of your portfolio performance. I've been a premium member of Tokenmetrics for almost 2 years now, and I am using it on a daily basis. They host regular webinars for their members with technical analysis and daily emails as well, where they go deeper into their research of new projects or current market conditions. I find this to be really helpful in my own market analysis, as they give me a hint to things that I might have missed or otherwise overlooked. You get a 10% discount with my link, and they also offer a trial period, so go check it out. Use my invite link in the description below.
Tokenmetrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams.
Alright, well, this wraps up today's episode of Crypto Corner, guys. You are now up to date, and I hope this brought value to you. Please show your support, leave a like and a comment below. Or if you're new to my channel, hit the subscribe button and enable notifications so that you never miss an episode. Also, make sure that you check out the links in the description, where you will find links to all of the crypto services that I'm personally using and that I recommend to you, including exchanges, hardware wallets, charting tools, and other services that I use to earn interest on my long-term crypto holdings. My 2 ebooks as well. These will help you get a better understanding of crypto and to navigate safely in this industry. If you want more valuable crypto content, follow my blog crypto-corner.com or scan the QR code here and sign up for my bi-weekly crypto newsletter. It's free and it's packed with market analysis, news and other insights to keep you well informed. Thanks for staying until the end, and I'll see you in the next episode.